Hello, everyone. My name is Barbara Armstrong. I'm a coach with Charles Schwab, and today in this mini session, we are going to talk trading plans, specifically a stock investing trading plan. So buckle up. We're going to try and make this quick, but we have, many components that we want to cover. I invite you to follow me on X if you aren't doing so already. My handle, BarbArmstrongCS. And just before we bring up our example trading plan, I just want to, remind everyone that everything we discuss is for information purposes only and shouldn't be considered to be an individual recommendation to trade any particular stock or chart pattern or strategy in any particular way. We're going to do an example on the paperMoney software application on the thinkorswim desktop platform, which is a great place to learn and figure out what you're doing and make sure you understand it before you consider trading in a live account. Know that past performance of any security or strategy doesn't guarantee future results or success. How we wish it was otherwise, right? Right. Okay, so let's come out and bring up our skeleton or our shell here that we are going to work together to kind of fill in. So, what's our objective? Because we can trade stocks in lots of different ways. We can do a short-term swing trade. We might be looking for value stocks or stocks that pay a dividend. In this case, what we are looking to do is to just invest in uptrending stocks over the intermediate. And so by intermediate, it's kind of 3 months to a year, or the longer term, 1 year plus time frame. And I'm a big believer in knowing when you're getting out before you get in. And so as long as that stock continues to uptrend, we would want to continue, a trader might want to continue to be there. Now, what kind of stocks are we looking for? Well, number one, we've used that word uptrending. So we're looking for stocks that are uptrending. And then we're looking for stocks maybe that are uptrending. You might want to have 3 boxes you want to check. You might say, well, and I also want the sector that it's in to be uptrending. And I also want the market to be uptrending, because if the market is falling, then really, even though that stock is uptrending, you're trending counter to the trend of the overall market. So some might want to try and check all 3 of those boxes. Now, the other thing that a trader might be looking for is for stock volume to be over a certain amount. So some might say, well, I want it to be over 250,000 shares a day. And others might say, I want it to be 1 million shares traded a day on average. And why might somebody want it to be 1 million shares a day? Well, perhaps they want to be able to sell a covered call on that stock. And the likelihood of a stock offering options is higher if you trade 1 million shares a day, if it trades 1 million shares a day or more. And so that might be one of the things they want to look at. Or they might want to, say, hey, I want something that has options that meet certain trading criteria. So and by that, I mean, they may want there to be a certain volume traded on the options if they in fact want to position themselves to be able to sell a covered call or buy a protective put. So, and this is kind of an optional, component. This is your trading plan. This is just a shell. So you can make your, the components whatever you want. Now, when might you want to buy? Well, when to buy, what we're really looking for here is a technical entry, which is based on looking at the charts. And so what might, and I'm going to say here, it might include, because this isn't going to be an exhaustive list for that, you may want to come to the getting started with technical analysis class, but you know, when something is bouncing off support level. So these are all bullish technical entries. So for example, a 30-day moving average, you know, or if it's breaking through a resistance level, or there could be a bull flag with a close above the high of the low day. And I'll type that in, close above the high of the low day. You know, so all of these could be potential entries. Okay, so we're going to look for that on the charts as well. Now, what about how much to buy? Can we buy 1 share? Can we buy 1,000 shares? How do we decide? And we call this, you know, position sizing, to use, you know, a more technical trader speaky kind of term. But there's kind of 2 components to that. And one is the max position size. And so you might say, well, I don't want any one position. So no one position to be more than 5% of the account value, you know, or 10, you know, it's up to you. You know, but we have $1 million pretend account that we're looking at today. And so our max position size is 5% of the account value, or 50,000. So we don't want any one position. Now, if you had a $100,000 account in that 5% rule, you wouldn't want any one position. So you couldn't buy the stocks totaling more than 5,000 worth if it was 5% of 100,000. And then what is your max risk per trade? So if the trade went wrong and you ended up out of the trade, how much are you willing to risk? So some might say 2%, or 1%, or, you know, half of a percent. Or in our case, 1/3 of 1% of the account value on $1 million account. Now, in our trading a smaller account, we're willing to risk 2%, you know, of 25,000, or about $500. In our pretend $1 million account, we're saying we don't want to risk more than 3,300, which is 1/3 of 1%. So this just kind of gives you an idea, okay? And then when do we want to exit? Well, when it stops going up. Well, how do you define stops going up? Or not just stops going up, what if it starts coming back down? And so what is our rule going to be then around that? Well, our initial stop, we might say, well, I'm going to look at a support level. And in this example, let's use our 30-day moving average. So our initial stop is 3% below the 30-day moving average, the simple moving average. And then as new support levels are created or established, we're going to move the stop up. And, you know, part of our routine might be to check weekly for new support levels, for either new support levels, or, and this is really important, you know, a break of support. And when we get that, you know, break of support, so when the stock closes below the 30-day moving average, and there will be you can set it up so that a red arrow appears on the chart, then you would move the stop to 3% below the low of that day. Okay. And then you would exit, when you are stopped out. Now, do you have to wait to be stopped out? If you saw something extraordinary happening in the market, could you get out earlier? Of course. But this is just a way to employ a set of disciplines, if you will. So let's now come out to a chart. And so with this chart, I am just going to come here and show you how to add this arrow. So we're going to come to edit studies. I'm going to get rid of this 100-day moving average just to get rid of the clutter. And then for our simple moving average, when you add it to the chart, you're going to come to the sprocket and it's going to say here, show breakout signals, and the default is no. And we're going to change that to yes, and then hit OK and apply. And there we go. And so in this example, I want to kind of look a little bit back in time and pretend that we're looking back in time. And then we will place an example trade currently, but we had a stock that was downtrending. And then we saw it break above a resistance level here back in August. And some people might have said, well, we could have bought the stock that day. But some might say, well, I want to be sure it's a breakout and not a fake out. So they might have given it a week or so. When it came back here to the 30-day moving average and then bounced, maybe they got in this day. So that would have been around September 10th. And if their first stop was put 3% below the 30-day moving average, and you could make it 4% or 2% or 5%. I'm just using 3% as an example. The initial stop would have been around 46.98. And then as part of your weekly routine, might you have chosen, to put adjust your stop when it came up here and then continued to go up? Maybe we could have adjusted the stop to about here. And that would have been totally legit. And then it continued up and came back, and it didn't close below the 30-day moving average, but it kind of came, as I would like to say, within kissing distance. So maybe we moved our stop up again then. And the goal originally is, in putting the first stop in, is to define our risk, and then it's to kind of eliminate our risk, and then it's to start protecting our profit because we bought it here, and now we're putting stops in above where we bought it, but still giving it enough room to breathe and go up, knowing that it will occasionally pull back. And then we might have adjusted our stop to 3% below here. And then on this day, we had a red arrow. And so on December 16th, we would have adjusted our stop to here. And then we might have adjusted it a couple of times in here as well. And then here on January 27th, this big red candle day, you see we have this red arrow on the candle on the chart. We would have adjusted our stop here. And, had we bought this stock back on this day and been using these rules, we'd still be in this trade. We'd still own this stock. We would have bought it at around, the $49-ish mark, and it's now trading at $63 or $64. So, might we have looked at things at the end if we were looking at this weekly and adjusted our stop up to 3% below this 30-day moving average, where it is now? We could have, and that would have been around $59.70. Now, if we don't own it and we're thinking like, hey, this is looking like a bit of a bull flag, but we don't have that close above the high of the low day yet. But if on Monday it goes above the high of that low day, could we set it up to buy some shares? And then, how much could we afford to buy? Well, this pretend account, our max position size is 50,000 and our max risk per trade is 3,300. So if we put our new stop here at 59.70 and we were looking to buy if it closes above today's high by say 20 cents, that would be 64.15, or sorry, we'd be getting in at 65.16 because it closed at 64.96. And if our stop is at 59.70, what are we risking? Well, we are risking $5.46 a share. And so if we take that and we divide it by our 3,300, so let me just wipe my slate clean here, and we'll come over to our calculator. 3,300 divided by 550. Oops, sorry, I should have put the dot in there. So we could buy about 600 shares. Okay, so let me just do that again. 3,300 divided by 5.5. So we could buy about 600 shares if we got in, if it went above here. And 600 shares times about $65 is about $39,000. So is that less than 50,000? It is. So that would meet our position sizing requirements. And how we would put that in, we would come to the trade tab, we would right click and buy custom with a stop. We'd put our stop in at that 59.70 mark. We would make our entry a conditional order. We're going to make both of these good till canceled. And our condition is that we only want to buy 600 shares of this stock if it goes above 65.16. So we're going to hit the save on that. And we want to buy 600 shares. Confirm and send. So that's about a $38,400 position. We're looking to buy 600 shares if the stock goes above 65.16, and we would put that in our stocks, you know, because we're buying it because we want it to grow. Now this particular stock also pays a dividend, but you know, that wasn't part of our analysis today. And dividends, there's never any guarantee that they'll continue to be paid. And so when we looked at this stock, and you know, I kind of skipped through this, but does it trade 1 million shares a day or more? Absolutely. 18 million shares traded today. Is the stock uptrending? Yes. Is the general market uptrending? Oops. Yes, if we use the S&P 500, up over 20%. You know, even though today was a down day for the market, it hit a new all-time high 2 days ago. And then this is a stock in the tech sector. Has the tech sector been uptrending? So I have all the sectors over here in the gadget section, and this sector has overall been uptrending. And so, you know, it met our criteria, didn't it? All right, so I hope this example has been helpful to you. You know, and again, this is just an example trading plan, but I hope you found it helpful. Again, this is just for example purposes only. I really appreciate you joining me today. Thank you so much for being here, and stay tuned for another mini session coming your way soon. Have a great day, everyone. Bye for now.